here, when we talk of, say, innovative financing models, and a lot of things are being said about it, the conventional way in which you all are exposed to this is, okay, make the CMA data, approach a chartered accountant, he will make all the projections for the next 5 years, 7 years, 10 years, depending on the requirement. And it's a matter of just a statistical prowess or a numerical prowess. And you as an SME entrepreneur would not make a head or tail out of it. And that is the reality in today's world. So what innovation does a modern day bank bring into all this? And modern day bank doesn't necessarily mean a private bank like us. It also means public sector banks who are all in the anvil of changes. So one is that the banks are shifting to a rating model which is scorecard based. When it is a low ticket size credit and the decision making has to be made very fast, we have evolved into a scorecard based mechanism where it is an alternate lending model, alternate way of evaluating the customer, where so many details on the financial side are not being asked. So you will realize with a lot of pleasant surprise or pleasant experience that when you approach a proactive bank, they will be able to decide on the loan application in 1, 2 or at the most 3 days. That is the turnaround time that we promise to our customers, right? So that is one of the things. The banking fraternity is migrating towards that. The second most significant thing which is happening in today's world is that, especially this is more relevant post demonetization and post GST implementation. There is no other way of handling your finances. It has to be the banking system, right? No alternate cash flow management can happen ever now. Nobody can violate the law on a standalone basis. If a violation of GST has to happen, the whole chain has to default, right? So that the government has plugged each and every loophole. So the so-called, into inverted commas, the cash handling of the SME businesses is now completely gone. Each and every transaction has to be routed through the banking system. And mind you, this is a very good development. It may happen that, okay, there are some glitches right now, there are some, operational issues right now. But when your transactions are captured into the banking system, we will be able to develop alternate ways of evaluating other than the balance sheets and audited financials. Your transaction history, which happens through the banking channels, will evidence a lot about your business. And it's a dynamic way of assessing the balance sheets, a dynamic way of assessing a customer, rather than going into the static data that what was the position last March and what is the DSCR that is going to be in, say, the year 2022. I mean, this kind of models are now, not necessary for evaluation. Once your transactions are getting captured, we will be able to evaluate even based on your banking history. So for your information, at Yes Bank, we have a product which only looks at the banking statements and gives you the credit. No financials are asked. And this is indeed an innovation. You give the banking statement on a digital platform in a PDF format, you will not be even able to, you're required to submit it in physical form. And this is the evolution of technology, how it has happened. So this is another alternate lending model which has developed to capture the transactions. Once the transactions are being captured, you don't have to do anything. The third thing and the most important thing is the conduct of the account. Now, what happens many a times, as Sir Raju Sir rightly said, that SMEs are challenged with respect to the covenants. Whatever the terms of sanction are there, a lot of breach happens on account of this. There are compliance issues, compliance challenges, and all MSMEs are not equipped to handle that, right? Because of, number one, lack of adequate, resources, skilled manpower, or maybe lack of the technology or the softwares, etc. Now, if you pay attention on this, and a lot of things would go electronically once the GST regime is fully implemented, a lot of things would be electronic, and compliances would happen automatically. And because of this, once the compliance, the breach of covenants doesn't take place at all, the conduct which is there is extremely important. Today what happens that most of the terms, whenever you have a need of, say, raising a term loan or, say, enhancing the working capital in the middle of the year, you come to the bank and then the bank gives you a list of what you have not done. You have taken so many times TODs, you always have, you know, the check bounces because of insufficient funds and so on. There is a long list of crimes which the bank will give you as a list, which will not necessarily happen if you go on the electronic compliance, you introduce automation, you introduce digitization in the business. And once the conduct is good, a conduct-based, rating is done, and it doesn't require, again, the old traditional approach of submitting the balance sheet and the financial statements. For example, at our bank, we have an auto-renewal mechanism. Our relationship manager will never come to you and disturb you in the middle of the year for renewing the account. It will be done automatically. Because the conduct is, we classify the accounts into the conduct, various conduct categories, and rate them. And if certain categories are there which are above the threshold, the account is renewed automatically. Even the enhancement is given automatically to a certain extent. So that is the way the banking is evolving these days. Another thing which is which is plugging the SMEs is the leverage. When you start the business, make sure that you are adequately capitalized. What happens many a times is that we see that the SMEs are too very highly over leveraged, and because of this leverage, we are not able to put in our money. It is ultimately a joint, it's a partnership between the bank and the promoter, right? If the promoter pumps in the money, then only the bank will follow. The promoter, first of all, needs to have adequate confidence into the business. If he doesn't have, it will never happen. And therefore, this leverage needs to be controlled, even though there could be people, there could be NBFCs who would be ready to give you unsecured finance loans, unsecured business loans, etc. Please avoid that temptation of going into that mode. It is very costly, mind you. 16-18% is the rate of interest for unsecured business loans, and it doesn't help the business in any way. So the royal route, the traditional route, which is there is that, okay, you take more and more loans, borrow more, and then you increase your working capital, is not a sure shot route which will help you in future. So leverage needs to be checked, and therefore that is the financial health of the business. Incipient stress, if at all it is there, the business's capital should be adequately covering up that kind of a risk on the business. Another thing is that how do you raise the funds, right, when the business starts? These days, innovations are of course there. A lot of, government is also pushing a lot of things like Mudra or the stand-up or the startup, and the most important, the most critical in all this is the CGT MSc by SIDBI. My, gentleman from SIDBI is there on the panel, and this CGT MSc has worked very wonderfully in case of, private banks like us, because our NPA ratios, mind you, I cannot quote, and you will never believe, not a single account has gone bad as far as CGT MSc is concerned. Not a single claim has been put up on the SIDBI on account of CGT MSc, and this gives a lot of confidence on the evaluation mechanism that government's money is also our money. We don't treat it like a collateral, and we see to it that the adequate mentoring happens to the startup when we give the loan, and therefore this kind of loss is not there. So it's a fantastic tool for the startups. Make full use of that. Another thing is being a member of supply chain. What happens is once you put up the proposal in the bank or you want to raise the finances, you should the bank should be assured of the cash flow, the business model. Now, if you are a supply chain member of a particular anchor company or anchor corporate supplying to a large company, or you are a distributor of a large company, something like that, what typically happens is that we are able to evaluate the cash flow and also have a certainty with respect to the money returning. So it's a cash flow based lending model, which is very good. It is considered to be a very robust form of credit if at all we are funding to a supply chain member of a large company. So the chances of failure are less. So just evaluate that as you develop your businesses, how to tie up with a large company, how to be a supply chain member. Even if you are a vendor for that company, it would be really a great thing to explore. The most important thing that manufacturer needs to take care is the technological obsolescence and the role of the substitutes, the imports, and the taxation regime, which I need not advise you. You all are very much equipped to know that. But here the technological obsolescence which is there, import substitutes from countries like China can ruin the business. And it can be very, very disruptive. So be very careful when you invest into capex. So this is only thing which I had to tell you. Sir said about the co-financing models. Yes, we are working on the co-financing models. We have partnership with, okay, SIDBI is there, one of the institutions. We also have lending partnerships with several modern age fintechs, financial technology companies that have an alternate way of evaluating the creditworthiness of a borrower. For instance, they will never ask you on any of the financial projections, but gather the data about your business by indirect means, by way of the cash flow, by way of the transactions, by way of the your presence in a particular micro market, by way of your tie-up with an anchor or a higher, larger corporate. And these fintech companies use analytics. Many times they use the artificial intelligence or the machine learning to predict whether you are good or not. And this is a very new development which is happening in the country. The banks are lending based on the comfort given by these innovative companies. And these innovative companies which are there, they give comfort to the banks in the form of guarantees. So it's a back-to-back arrangement, and it is going to scale up the way the business is done in future. Say, for example, to give you a small example here is, we rely a lot on, say, Amazon. Amazon has an in-house analytics team that gives us information about the behavior of the sellers on their platform or the manufacturers who supply and sell on their platform, and we take our credit calls based on the inputs provided by Amazon analytics team. So this is the way we are collaborating with the modern day companies, the fintech companies and so on, and it's an evolving field, and I believe this promises a strong, it has a strong potential for the future. So the last but not the least is, in all this talk of digitization and technology and how do we manage, what a traditional bank used to do is that you need to approach a branch manager, and for that you required a role of a chartered accountant, because the branch manager would be involved in so many things. He would be handling cash, he would be handling this, he would be handling that, and therefore on the regulatory aspects, on the compliance aspects, on the evaluation of the credit proposal used to do with the help of some intermediary, market intermediary or a chartered accountant. These days, the banks have substituted it by providing relationship management at your doorstep. So there is a relationship manager, and mind you, we employ chartered accountants as relationship managers. So they are very well equipped to handle the financing aspects of the proposal. The credit appraisal is prepared by them, and they will not at all take this, as something which is not, understood by you. They will explain the concepts. They will also help you in making the proposal. And this relationship manager will handhold you throughout the stage of evolution. He will serve you, he will provide a mentorship, it's a kind of a mentorship role, and he will provide various inputs from the industry, from the peers. So if you are from a cluster, he will tell you that these are the best companies in the industry, in your sector, in your area, and their financials look like this. Why don't you benchmark your financials with this? So this kind of a mentoring role is performed by the modern day banks by providing relationship managers at your doorstep. Thank you so much.